Loan from Germany, France for clean fuel shipped. And Kenya tea exports to Russia drops.
Hello everyone, good day according to you, and welcome back to Learning Sticky. Hope you guys are doing well. Please, if you're seeing my channel for the first time, don't forget to subscribe and kindly leave your comments and also click on the notification button. Please kindly follow my page and like. Yeah, guys, this is real something that you need to know of. How the work system will be reducing gradually. And my question is, if they are reducing the work system, so how are they going to be feeding all the people? Because that's come first. People need to live, they need to survive. So how is that going to be possible? Because this news make me to understand that in Europe or in UK, time to come, or in the world, let's put it that way, they will be reducing, you understand? And in case if you don't know, for quite some time now, UK have been suffering really like economic situation. It has been facing it, and it's a very drastic one. It's really complicated to explain. So I have been listening to that like for some time, and they're so scary because UK was forced to increase the people that took their mortgage years back, their taxes. So if you took mortgage, like you have to pay like 2% or 3% or even 10%. Maybe at a time now you find yourself to the level of 30%. How will you feel? I think this is really a bad news for the people that are holding the government, because you never know when they will come up and they will say, oh, the economy is bad, so we really need to get the money from somewhere. And they never have anything they do apart from getting money from you, whether Europe, Nigeria, any part of the world, you know. So guys, take a look at this video so that you can understand that things are not really the way we are saying it in our various lives, and the reason why things are so expensive today. For those of you that live in Italy, you can tell me that if you take 50 euro to, like, you can really be in agreement with me on this. If you take 50 euro to the supermarket, you just take what they call carta igienico, you take the toilet paper, you took one or two things, maybe you take a nice tomatoes, a fruit and that, they will give you like €5 pack. I don't know if that is also happening to you, or eventually you take one oil and it's €5, €4, and I don't know. So I don't really know what's going to happen next. So you take a look so you can start thinking and also understanding. It's not more like thinking, it's more like understanding that what is coming, we all need to be prepared for it. That's why I'm bringing it to you. You understand? That's why I'm bringing this to you. It is important, so you don't see it as a suddenly impact on you.
Ethiopia seeks International Monetary Fund loan to fend off hunger for 20 million people. Hello and welcome to the program. I'm Will Ibang. Let's begin with markets in Africa, where we saw mostly positive sentiments at intraday. However, not much price movement in Nigeria's NGX, as it remains unchanged at 43,462 points. South Africa index rose 0.7%. Now over to other markets where we track. In North Africa, the EGX 30 is also up 0.28%, while Kenya closed negative on Tuesday. In the Middle East, it's the mixed sentiments at intraday. In the UAE, we saw the Abu Dhabi index up 0.14%. Dubai was down 0.15%. And when we look elsewhere, Saudi Arabia was down 0.82%. That's almost 1%, while Qatar was up by 0.24%. In Europe, Germany's Council of economic experts says the predicted recession in the country will be milder than thought. And the group of economists is also offering advice on what the government should do in order to help people deal with that. But before we go into that, we'll dive straight to Juliana to talk about what's happening in London, where we see a myriad of downturns, cuts here and there as economic downturn bites into households and businesses. Juliana, good afternoon. It's good to have you on the program.
Good afternoon, Will.
And Juliana, is beginning to seem increasingly difficult to stay above waters right now. We see pub chain Wetherspoon saying it's selling 39 more pubs. The economy is hitting hard, isn't it, Juliana?
Yeah, absolutely. We have had some disappointing trading updates from Wetherspoons, which has affected other pubs and brewers that are sitting on the FTSE 250, which is the domestic market. And that's because sales are down. They've just updated their investors for the first 5 weeks to the 6th of November, and sales are down by about 1.1%. They're also incurring extra costs all over the place due to the cost of living crisis. We know that's a massive issue that's really impacting the hospitality sector because, of course, if you have less cash at the end of the month, most people will avoid doing luxury things. And for many consumers in the UK, going to the pub for a drink is considered a luxury. It's quite interesting that the chief executive of Wetherspoons, which is a really popular pub chain in the UK, he did say that he believes one of the biggest negative impacts of the lockdown on pubs and bars in this country is the fact that punters, as they're called, have got used to drinking cheap alcohol, which is available in supermarkets, because of course, when we were in a lockdown, lots of people were using the supermarkets to get their stock in, and they haven't returned. So disappointing data update for investors that are interested in Wetherspoons, the biggest faller on the FTSE 250 today, and it's also dragged down other competitors with it.
Juliana, I do remember when I was in Wetherspoons. Now, I don't know if I'll find Wetherspoons when I come maybe nearby where I'll be staying. But now we see Facebook. This is quite huge. Facebook owner Meta is beginning job cuts today. And we've seen already that over 11,000 jobs are going to be, employees are going to be cut off. How are UK residents digesting this news?
Yeah, this is a big story, actually, that is affecting Meta's global workforce, which I believe is about 88,000, but they are cutting over 10% of the workforce, which is a huge amount. We're not yet sure how this is going to affect those in the UK. Of course, Meta, which is the parent owner of Facebook and Instagram, their HQ in Europe is in Ireland, in Dublin. I believe they've got about 3,000 staff there. This is a developing story, so we're just waiting to hear how many UK staff are going to get the chop. I think it's worth mentioning as well for Africa, Nigeria in particular. I do believe Meta did open a HQ in Lagos recently, and there have already been mumblings about what's happened to Twitter staff, because we know, just a few days ago, Elon Musk, new head honcho there, decided to cut nearly 50% of Twitter's staff. I know there's been lots of talk about severance, but we know that laws in Ghana, where Twitter was headquartered, aren't the same as the laws in the US. So really important story, which we should follow. And, let's keep our fingers crossed for Meta staff in Nigeria. But yeah, there is a statement here that I do have from Meta's CEO, Mark Zuckerberg. He said, "This is a sad moment. This is what was shared via email to the staff who have been cut. And there's no way around it. To those who are leaving, I want to thank you again for everything you've put into the place." He continues, "We would not be where we are today without your hard work, and I'm grateful for your contributions. To those who are staying, I know this is a difficult time for you too. Not only are we saying goodbye to people we've worked closely with, but many of you also feel uncertainty about the future." And he goes on and on. But this is part of a bigger story, as I was saying, Will. Twitter cut half of their workforce. Microsoft last month cut about 1,000 jobs. The tech space is changing. We are living in an attention economy. We know that, ByteDance, which is the owner of TikTok, has come in and has become the dominant force in the kind of online social media platform space. Year to date, Meta's shares are down 71%. Billions have been wiped off their market capitalization. And, what happens when that happens? Staff at the bottom get the axe wielded into them. So not a great story. But I think, more concern about the staff in Lagos than the staff in the UK at the moment, which we think they may be okay.
So it's just a wave of layoffs in the tech space, Juliana, as we say. We're just hoping that more tech companies do not declare or announce job cuts, because it's not going to be easy for those employees who are going to be cut off at this moment. How are markets reacting to all these news? Just very quickly.
Market's not great. FTSE very much in the red at intraday. Like I said, that update from Wetherspoons has shook the market. Also disappointing trading update from ITV, massive broadcaster here in the UK. Their shares are down 5.9% because they said they're losing advertising revenue. At intraday, the all share is down 0.26%. FTSE 100 down by 0.23%, and the FTSE 250, that's down by over 0.5%. In the currencies market, the British pound is trading down on all major currencies at intraday. £1 will get you $1.14 and €1.13 at this moment. Well,
thanks so much, Juliana, for the update, and we'll keep an eye on it. It's certainly something we should keep an eye on Facebook. Thank you so much.
Yeah.
And now we'll move over to Europe, where Germany's Council of Economic Experts are saying that the predicted recession in the country may be milder than they expected. But we have DW's Chris Kober with more details on what's happening and how they're dealing with the rising prices in the country. Chris, how bad of a downturn are the experts anticipating?
The expert council is expecting the economy to shrink by 0.2%, which is only half as bad as the government's projections have been. That's according to the annual macroeconomic assessment, the group consisting of 5 economists presented today. And looking at the current year, the economists are also more optimistic than political leaders in Berlin. The expert council saying that GDP growth for 2022 is likely to come in at 1.7% compared to the 1.4% expectation of the government. Now, this slightly higher prognosis stems from the economy performing unexpectedly well over the summer. GDP growth in Germany stood at 0.3% in the third quarter. That is despite the energy crisis triggered by Russia's war on Ukraine. Initially, economists had expected the economy to contract slightly. A major reason for the expected recession, albeit a milder one, according to the expert panel, are the dramatic price increases, which are taking away from consumers' purchasing power. Inflation in Germany, according to initial estimates, stood at 10.4% last month, ticking up from an already high 10% in September. Experts are expecting an annual inflation rate of 8%. Now, Germany is trying to move its energy consumption away from fossil fuels, whose sharp price increases are largely seen as a main driver of inflation. Nevertheless, the Council of Economic Experts is expecting unusually steep rising prices for 2023 as well.
So the government has already introduced packages, subsidies, and financial support. What are the recommendations that the experts are asking for?
Well, the expert council is calling on the government to raise taxes to be able to pay for these expensive measures. In particular, people with higher incomes are to shoulder more of the financial burden. The group is suggesting the top tax rate should be increased. Alternatively, high-income households could be paying a solidarity surcharge on energy. These measures would help the government's financial support ambitions to be more targeted. The experts claim, and they would also be sending the signal that the energy crisis needed to be tackled through solidarity. The economists say that only people with low incomes should be benefiting from public relief packages, as they spend a much bigger portion of their earnings on energy, rent, and food compared with better-off households. Previous initiatives, like temporarily waiving the state tax on fuel and subsidizing public transport tickets over the summer, hadn't been targeted enough, as these measures had also been benefiting higher income groups, the experts say. And that is quite some explosive stuff the economists are recommending here, particularly for the liberals in Berlin's three-party coalition. They've been fighting tooth and nail to avert any raising of taxes successfully so far. And this expert report is going to support Social Democrats in the government in their quest to have the rich pay more in this country, something that they campaigned on before last year's general elections, but which they had to give up up in order to set up a governing coalition. Now, the other junior coalition partner, the Greens, have also been welcoming this idea.
So what's the word from the trading floor today?
Well, investors continue to keep their eyes on the midterm elections in the U.S., of course, although the impact so far is limited. Up until now, the red wave of Republican victories in the race for House and Senate seats did not materialize. The situation, the economic situation in China is also on people's radar. Fresh data suggesting today that Beijing's zero-COVID strategy is taking more toll on the economy. China's producer price index fell by 1.3% on year in October, pushing it into negative territory for the first time since the end of 2020. And at the same time, the consumer price index moderated slightly last month from September's two-year high of 2.8%. In response to all of this, the DAX in Frankfurt is retreating. German stocks are down about 0.5% in the early parts of today's trading session.
Thanks so much, Chris, for the updates. We'll look forward to more tomorrow. Thank you. And now in Asia Pacific, stocks were mixed Wednesday as investors digest incoming results of the United States midterm elections, and China's annualized producer prices fell for the first time in October since December 2020. The Hang Seng Index in Hong Kong lost 1.62%. In mainland China, the Shanghai Composite shed 0.53%, while the Shenzhen component was 0.79% lower. The Chinese yuan weakened past 7.25 levels against the US dollar after its latest economic data release. Now we'll see a global downturn for crypto as FTX is the cryptocurrency market today moved further away from the $1 trillion market capitalization level as Bitcoin lost the $18,000 psychological level. Yesterday, FTX struck a bailout deal with larger rival Binance after a surge in withdrawals caused a significant liquidity crunch. Concerns about FTX financial health reportedly triggered $6 billion, that's about 5.2 billion pounds of withdrawals in just 3 days. And now the news sent shockwaves through the digital assets market, with cryptocurrencies falling sharply. Next, a look at Kenya's $4.1 billion climate financing, and that conversation is right around the corner. Do stay with us. This is Business Incorporated. We'll pick up from the U.S., where stock futures urged lower in early trade on Wednesday following recent market gains as results of the midterm elections dragged on, with control of the U.S. House of Representatives and Senate bills still up in the air. Futures tied to the Dow Jones Industrial Average fell 0.32%, S&P 500 futures dropped 0.25%, and NASDAQ 100 futures declined by 0.22%. Now, before we go, let's take a quick listen to yesterday's market close with our correspondent, Maria Bird.
The U.S. stock market rallied on Tuesday as the U.S. midterm elections were underway. It is clear that many investors are watching to see how the midterm elections end up, as it is expected that the House and the Senate might be split. This will have a direct impact on the U.S. stock market, which rallied on Tuesday for the Dow Jones to be up by 1.01%, the S&P 500 up by 0.55%, and the heavy tech NASDAQ up by 0.48%. The coming days and the results of the midterm elections will definitely be reflected in the U.S. stock market over the coming days.
Maria, now it's still all about the COP27 ongoing now in Egypt as heads of governments and institutions congregate at the International Climate Summit in Egypt to discuss solutions to climate change. Part of what has come out of this, so what we are seeing, is a deal between the UK and Kenya to accelerate the implementation of climate projects worth 500 billion shillings. That's $4.1 billion in the East African country. Mercy Milanoy, business reporter in Kenya, joins me to discuss the impact this deal will have on the Kenyan economy. Hi, Mercy, it's good to have you on the program. Hi, Mercy, I think you'd need to unmute your mic.
Oh, let me see.
So, Mercy, how significant, just give us a picture, how significant is this climate deal for Kenyan economy in the near term?
Well, it's quite significant because as we speak currently, Kenya is going through a lot in terms of the effects of climate change. We have had delayed rains, which of course has affected food security in the country. At the same time, also we have had lakes overflowing, such as we had an incident with one of the lakes in Lake Bogoria, Lake Baringo, which overflooded and of course affected a lot of people. So definitely the financing comes at a time where Kenya is in dire need, of course, of funds to mitigate issues to do with climate change. And of course, with the agreement between Kenya and the UK, part of the money will go towards Tana River to do hydropower. And of course, Kenya has been quite at the forefront in terms of clean energy. Currently, we have geothermal power, which has been facilitating Kenya's power for the longest time. And now we are trying to head on to hydropower. So according to President William Ruto, as at yesterday, he said that, of course, part of the money will go towards production of hydropower, about 1 gigawatt of power that will be produced from Tana River here in Kenya. And also now the rest will go ahead to irrigate more than 400,000 hectares of land, and of course to ensure that Kenya is food secure. Now, the interesting thing is that part of the area around Tana River where, of course, the hydropower project will be taking place, the government had implemented quite a big project for agriculture known as the Galana Kulalu irrigation scheme, and that was supposed to produce enough, especially maize, dry foods, so that they can be able to boost the country's food security. So it is quite significant to see that the efforts are still being put in place, especially for irrigation, especially now at a time where we cannot depend on rain-fed agriculture, which has been the case in Kenya. This year, it has proven quite well that you can depend on rain-fed agriculture. Currently, we have hundreds of thousands of Kenyans who are facing starvation. And of course, now these efforts to put up the land for irrigation and also at the same time to produce hydropower, it will be quite significant for the Kenyan economy.
Interesting development going on there. We do know that most of the promises, the leaders after COP or during COP, they tend to overpromise and under-deliver. So we're just hoping that doesn't happen in this instance, Illinois. But how would I just want to know, you mentioned different sectors now, the agriculture, and we're talking about irrigation, water, resources. How would the ESG companies benefit from this deal?
Well, Kenya has been, the Kenyan government has been at the forefront, of course, to encourage companies to be ESG compliant. Currently, we have about 7 of the 63 companies listed on the Nairobi Securities Exchange that are ESG compliant. And of course, for now, it's a lot of incentives and being thrown out there to ensure that more companies join and become ESG compliant. And of course, in the long run, also have efforts and of course strategies in place to ensure that they reduce their carbon print. We have companies in Kenya that have really done quite well. We have the largest telecom company, Safaricom, that has really even been putting out and even issuing out the sustainability report to just ensure that, first of all, they're sustainable, they're running a sustainable business, and they're ESG compliant. Also, at the same time, we have East Africa Breweries Limited, also here in Kenya, that has been quite ESG compliant, and they've been very vocal in terms of their sustainability measures. And it's not just about just having a corporate, just doing it for corporate, but also ensuring that they make an impact in the places that they are doing business.
Okay.
For instance, with East Africa Breweries, they've been really massive with empowering farmers to be food secure and, of course, give them farm inputs to ensure that they do sustainable agriculture. Okay. Safaricom, on the other side, has also been doing a lot of projects to ensure that there's water, that children are educated. So all these companies have just been putting the best foot forward to ensure that they are sustainable and that they impact the environment and the economy and the people around them well.
It's good to know that we see that one of the projects to be implemented is the development of a smart railway city in the capital, Nairobi. But as we know, this is not the first smart city project to be proposed in Kenya. Tell us about that.
Well, it's not, you're right, it's not the first one. Initially, a few years back, we had the Vision 2030. And part of the Vision 2030 was to have a smart city called Konza Metropolis. So Konza was to, of course, the project is still ongoing. They're still putting up infrastructure in place. There are a few companies that have already signed up to set up shop there. And it was simply to ensure that, of course, number one, it's a smart city, it's very technological driven, and at the same time is to simply tap into the tech talent in Kenya.
Okay.
Of course, Kenya is known as the Silicon Savannah,
okay.
so it's simply just trying to see how they can tap into the tech talent, while at the same time to use as much technology as possible to reduce carbon print and ensure that the city is smart-led, and the companies that will set up shop, of course, will be using a lot of tech to operate.
Thanks a lot. Thanks a lot, Mercy Milanoy, business reporter, Kenya, for sharing your perspective with us. And we do hope we keep track of what's happening in COP27 and more developments coming up there. And now moving on to other stories. Still in Kenya, Russia is purchasing more tea from India at a cheaper price as supplies from Kenya have become costlier. Russia is the 5th largest buyer of Kenyan tea, but in recent weeks, Kenya tea prices have started moving northward, and that data is from the East African Tea Trade Association. And now we move on to South Africa, where the country has signed a loan deal facility with France and Germany for the two European countries to extend 300 million euros each in concessional financing to the country to support the country's efforts to reduce its reliance on coal through a just transition to cleaner energy sources. The French and German public development banks, AFD and KfW, have provided the loans directly to the South African government via the National Treasury. And that's it on Business Incorporated. Do join us tomorrow for another edition. I'm Willie Bung, and don't forget to follow us on social media and all our other YouTube platforms. Thank you so much. Au revoir.